Hi, this is Michael Waits, and welcome back to India GameChanger. We are joined today by Archana Jahagirdar, founder and managing partner at Rukam Capital. Did I get that right? I
You
did
got
get
it
that right.
all right. Everything was
Beautiful.
yes, well done.
Thank you, Archana. It's great to have you on the show. Before we really jump into this, let's give the listeners a little bit of your background just for some context, please.
So basically, I don't come from the financial world, and I was trying. I mean, I was in the early stage angel investing space, and I was trying to set up a accelerator because there was a belief in India at that point. This was before Y Combinator got very active in India. That we needed an Indian version of Y Combinator, and we said, okay, can we try and attempt it? And very quickly, founders came back saying that, all the knowledge is great and good, but I want hard cold cash. So we said, okay, then we'll just become a fund. So, the way early stage investments and VCs are now, I mean, it's almost like being a PE, right? I mean, founders expect and want a lot of input and a lot of assistance in different aspects. I mean, the business world is also more complex. So in a sense, we bring in the accelerator mindset, which is how do you scale fast? What are the tools that you need? What are those networks that you need from us? And then, of course, there's capital, which is most welcomed by the founders.
Okay, so this brings up a really interesting point. If the founders were more interested in, as you said, the cash, does that mean that there's a gap in early stage funding in India? And if there is, why do you think so? Particularly because from the outside, right? When I look from the outside in, it seems to me that like the ecosystem in India is really vibrant. Yeah.
So it is very vibrant, and that's entirely due to the gumption of founders. There are
Yeah.
lots of founders who are starting up. Literally, they're jumping in without a parachute almost, because capital is that parachute for early stage founders. Yes, there is a gap in funding and capital because see, India traditionally, we were a large part of the population was unbanked. In the last 10 years that has changed significantly, but again those are very modest sort of bank accounts. These are not bank accounts which have got a lot of cash sitting there or a lot of transactions happening through those bank accounts. So we are still underfunded, undercapitalized, and definitely when it comes to risk capital, it's a completely new asset class. So in India, somebody giving you capital just for equity, and then there's no collateral. There's, no sort of somebody coming knocking on your doors and breaking your kneecaps when you don't return that money.
Sounds like
Is
New York.
yeah, is fairly new. So the asset class itself is new. So even for potential LPs to understand this asset class is going to be a journey over some years.
So, I mean, I've said for the longest time, right? I've been doing this show for a while, but I've been doing my largest show, the Asia Tech Podcast, since 2017. And to be fair, I was an LP in a fund in Southeast Asia as well. And
Get
it
your
was
money
early
back?
stage. Say it again.
Did you get your money back?
Yeah, I did actually.
Well
And
done.
but again, this fund was very typical. Let's say it invested in 10 companies, like 5 of them went bankrupt, 3 of them were okay, one of them was pretty good, and then the last one is probably going to IPO
Oh,
and is probably going to be worth over $1 billion.
oh.
So, yeah. But again, very typical. And it's, I always say in the startup world, everyone's a success, everyone's an overnight success 10 years later, right? Everyone expects to get rich overnight, but it doesn't happen. But I guess my point here was, if you're a Series A investor, a Series B, or a Series C, or even just like a pre-IPO investor, I'm not going to say there's no risk in it, but a lot of the risk is mitigated by the fact that you've already got product market fit. You've already seen what the founders are doing. But in the earliest stages, it's so risky, right? And like you said, you don't want to go and break anybody's knees. But what was it about you and about Rukam that said, we want to invest in that earliest part of the curve and take the most risk? Like, why do you care about that so much?
Maybe as a woman, you battle a lot of odds, so you're used to
Okay.
you're used to taking on the odds, and for a lot of women, even women from privileged backgrounds, I would say the odds are stacked against you, right? So I think look, somebody's got to be there at the starting point.
Yeah,
because if that capital doesn't exist, then there are no companies that will go to IPO. There'll be no companies for Series B and C. And my worldview is that you can mitigate that risk to a certain degree. I mean, you're right that a bunch of companies go bust in the early stage, but it's a function of how you choose the founders, and then there are certain mitigating factors which you can't control, right? So COVID was, of course,
for
that
sure.
factor, and COVID was not just about change of how consumers were consuming or how the market dynamics were working, but there was uneven supply of capital. I mean, there seemed like a lot of capital available, but it was for a very narrow sort of strategy. And as a founder, if you didn't fall into that narrow strategy, then there was no capital for you. And
Yeah.
then you look particularly stupid at that point because it looked as if there was so much capital and you were the only founder who weren't being able to raise. So imagine how a founder feels at that point when there seems to be land of plenty and you're the only one who's sort of not being able to cash in. So I think in India, I think there is incredible opportunity. There are sort of categories that don't exist, and that's the most, I think, rewarding part of this business. That you really see innovation, change, or a new way of thinking or doing business which didn't exist. And by the time it reaches even pre-IPO, or let's say it hits unicorn status, it's kind of to us it's already an old story, right? I mean, you're trying to look and be part of the future before the future happens, so to speak.
Yeah, I mean, look, nothing is obvious until it is obvious, and by that time,
Exactly,
it's too late to
exactly.
invest in it. Can I ask you this? What are some of these risk mitigating factors? If we can dig a little bit deeper into that, I always like to know like what an investor looks for in a founder, right? So if you see, I'm going to just make up a number, 20 founders a week, right? 4 a day, your firm looks at, and again, I don't know that for a fact. You must be looking for something, right? Because I believe, frankly, that particularly at the earliest stages of investing, that the team is probably way more important than the idea itself because the
Yeah.
idea will change, but those guys and gals aren't going to change much, right? They'll grow and get better, but their inherent self is not going to change much. What are you looking for?
Like with everything else, experience teaches you to trust your gut and your instinct. And again, investors don't like to attribute their success to gut because you want to talk about how
You want to have some
intelligent
kind
you
of
are and
science,
how
right?
much research and how many papers you wrote and how much how many research sort of reports you released and all of that. But the truth is that this is a human business. This is actually not a money business at its core.
Yeah,
It's about human motivation. It's about, does a founder really care enough to build a large company, not just care about the problem? I think a lot of investors make this statement, at least, I mean, I have heard this a lot saying, oh, does the founder care enough about the problem? But like you said, the problem or the solution could completely radically change
yeah,
in early stage because sometimes what you start with is not what you really end up building. I think what a founder should really care about is, do they really want to build a large company, because it requires everything out of you. There's a
yeah,
inordinate amount of sacrifice, hard work. And hard work, I think in India there's been a lot of debate about, hard work versus work life sort of balance. And the reason I think for that is because there's so many people who work hard, it doesn't necessarily lead to success. And that ambiguity is what scares people, that you will put in all that hard work and then not get that outsized reward that you see some people getting. So for us, or for me specifically, it's about meeting a lot of founders, understanding and really digging deeper into what that founder's motivations really are. So yesterday, for example, I met two sets of founders. One founder, very motivated, willing to listen, willing to have a conversation, willing to admit that he knows only so much. The
right.
other founder, who was far more pedigreed, far more privileged, had absolute statements that, oh, we will never do this. And I'm like, how do you know that? Like, you're
How
not
do you
even in
know
the market
that?
yet. But so the point is that sometimes, especially when you're very pedigreed, you've gone to all the right schools, you've had the right sort of corporate careers, or in India, like, let's say your parents have also sort of had the right background, you sort of think that you know everything. And to me, that's the biggest risk with a founder. Any founder who thinks that they know everything even before they've entered the market,
Yeah.
It's an absolute no-no for me. I mean, I would never ever back that founder, and I'm okay to be wrong later.
Yeah.
Maybe the
Yeah.
founder discovers that they don't know everything, but it's
Yeah.
always more rewarding to be engaged with a founder who understands that there's some things they know and some things they don't know, and there's a lot out there that they'll have to discover, learn, unlearn. And for me, that's more important than degrees or what they've done in their past lives, so to speak, because that's not really a good indicator of what the future holds for the success of the company.
I love it. I mean, I always say about myself, there are things that I know for sure, but there's a whole host of things that I think I know, and I can be convinced of otherwise. And frankly, I love being convinced otherwise. Can I ask you this? You mentioned this idea of like just because they have pedigree, but then I talked to this other guy who was just like had all these other different thoughts and processes. Do you feel like there's a little bit of an underdog mentality to the way you look at this? Like maybe that person's not meant to succeed, but they probably will. And I want to root for that guy or gal. Do you know what I mean?
So I'm an underdog. Rukam is an underdog. So obviously there's an empathy for underdogs, and which is why we like early stage investing as well. Because when you're investing in early stage, pretty much most founders are underdogs at that point. But in the example that I was giving of the founder who was much more open, willing to have a conversation. Now he has built the business ground up without having really raised any capital.
Yeah.
Um, and has learned by doing on his own money, so to speak. So, what my increasing conviction is that a founder who has built something with his or her own two hands, put their own money, not really waiting to get investor money to experiment, and the founder is pat positive. The business plan that he's given us for this round that he's raising is also talks a lot about profitability, but with growth, accelerated growth that we see is need. And when a founder who's already done it to a point comes to us and talks about accelerated growth with profitability, that's not a whole load of bullshit. That there is some background to what he's trying to say and build, as opposed to somebody who gives you a lot of bullshit saying, oh, this won't work, that won't work. I'm like, how do you know that? The whole point, I think, of being a startup founder is to discover what you know and don't know, and to
Yeah.
be okay with both. I mean, you have to embrace that you know little, and that you can sort of pivot or work your way with those uncertainties and new answers or new certainties that come your way.
Do you have a sector bias at all, or are you kind of open to anything, if you know what I mean?
Sorry.
Like, do you see sector bias? In other words, do you see specific places in India where you think this area somebody has to build this stuff, and you go out and look for that type of thing?
Uh, so I think that's a fairly time-consuming thing to do, because I think in India there's a huge headroom to grow in pretty much any sector and category. So again, I'm always amazed when founders are not building in everything, because I think we're just yeah, because I think this again this
There's
whole
a lot
thing
to
that
do.
what are those five sectors? I mean, consumers don't change like that. Consumers don't say, oh, we'll change for these five sectors, but for all other sectors we'll stay the same.
Right.
Consumers sort of change in wholes, not in parts and pieces, right? So like yesterday I wrote a piece about the Indian consumer having a much more variety seeking behavior across categories. It could be in your mundane everyday categories like your garbage bags, or your I mean simple everyday things which are not really top of your mind recall from a brand perspective. And you look at everything from mundane to interesting to non-impulse categories, and the consumers wanting something new, something differentiated, and something to tickle their sort of their senses far more frequently than they used to earlier, which means they're much more open to experimentation, which is why we are seeing an upswing in how startups are doing in India, as India as a market opportunity, than say earlier. So I think the opportunity to invest is across both in technology and non-tech, in consumer. I think the headroom to grow is just immense.
How long has Rukam Capital been around?
5 years.
Okay, so that's not a short period of time per se, right?
Right.
Have you seen over the last, let's say, 10 or so years, a change in the view of Indian entrepreneurs in the sense that they feel like the home market has so much more opportunity than markets elsewhere. Whereas in the old days, right, they used to say, even if I'm educated at IIT here, I say here, but I mean in India, right? I'm going to go to the US or I'm going to go to California or I'm going to go to Singapore and I'm going to build something. Are you feeling like even those guys and gals that went overseas are now coming home and saying the opportunity at home is just so much bigger that, again, it gives you more stuff to invest in?
Yes and no. I
Okay.
think there is, of the diaspora that is already in the US,
Yep.
and let's say who are now in their 40s. I think they are increasingly looking back at India because I think they realize that maybe they've hit some sort of a ceiling in their careers in the US. And from an opportunity standpoint, investment is ultimately, I believe, it's rooted to your nationality, or
At some level, yeah.
unfortunately or fortunately, um, if as a retail investor, not so much as an institutional investor. So I think those who are in their 40s are definitely looking back to India, 40s, 50s, and these are the times when you start taking, larger sort of life decisions again. You're like thinking about, what do you do with sort of pre-retirement, retirement, and post-retirement. Let's assume you're in a very structured sort of corporate career path. Um, Young graduates in India from IITs, I think, are still looking to the US as their first ticket to a high paying job. But when it comes to the entrepreneurial energy, that definitely is focused in India. The Indian fresh graduates who are looking to be founders right out of college or while still in school are looking at the India market as the first port of call as a market, as well as for investments.
Yeah, I mean, if I were a young Indian man or woman that was graduating from even a top university, a middle university, or even not, just looking around, right? All the opportunities, like you said earlier, right? If you're just focusing on sector one, two, or three, you're kind of missing the boat, as you said. And I love the way you said this. Consumers aren't saying, I want innovation just in retail and everything else is okay,
Yeah.
right? But with the massive population, massive land mass, and all just the massive differences across geography, the opportunities there must be huge. And if I were an Indian entrepreneur, I'd want to be in India, to be fair. I just want to find out the stories. Can I ask you this, though? A lot of early stage funds over time feel like, oh my God, I have like two or three winners in my portfolio, whatever that number is. I want to follow on, right? Because I don't want to get diluted. So do you consider not starting, but like adding another fund that reinvests in those businesses? And if not, or even if you do you still have to build relationships with later stage investors? Like how do you funnel them into, growth or Series A or Series B investors so that they can thrive?
So the best way to build a relationship with downstream investors is when your portfolio does well. So the
Yeah,
downstream investors automatically come to you. Then
fair
it's
enough.
not really heavy lifting. But look, we have a good equation with downstream investors. And on the portfolio construct piece that you said that, how do you just follow on with your winners? Because we've gone through COVID, and our portfolio went through COVID, and the companies were very very young, and we were deploying during the whole COVID period. So what we have seen and understood is that sometimes founders need a little bit more capital before they can raise a largish
Yeah,
external series BC, and we are okay with supporting founders with that. And I think that sort of helps them find their sort of feet and really be ready for the world. So you can consider us as really preparing them for the big bad world of series BC kind of investors, where things get really really serious and competitive, and there's a lot more at stake, right, for everyone, investors
for
and
sure.
founders.
For sure. The dollar numbers are higher. But
Yeah.
again, getting back to this risk thing, I think there's a lot of risk mitigation in between that. Can I ask you this though? You said it's not a heavy lift, but one of the things that my grandfather said to me that still resonates with me is that it's not, and sometimes it's not what you know that matters, it's who you know. And at some level, even if your companies are doing great, particularly in a market as vast as India, you still have to build that relationship with people so that they even know you're there, right? Like one of the things that I say is the hardest part for any startup is just merely being discovered, right? So how do you handle that discovery part of it without going out and just telling people, hey, look at company A and B kind of thing. Do you know what I mean?
So, like I said, it's a mix of, us putting in the effort. So, I mean, I do pound the streets a lot in the sense that there are a lot of events, there are a lot of
Yep.
marketing initiatives that we do at Rukam, because of which there is better sort of recognition of what we do, what our, founders are, what our portfolio is. And that really does help in discovery. But like I said, I've also spent some time in building the downstream investor relationships. So some
Yeah.
of my LPs are either LPs in those funds, or they know those GPs really well. So they made some early introductions really when we started in 2019, 2020. And most of them have been very, very receptive to, a new fund coming in and sort of trying to, build this whole thesis around the theses that we have across two vehicles. But like I said, I mean, ultimately it's the performance of the
For sure.
startup. And what happens is, see, what we did in fund one, and it also again speaks to my own innate personality, is I am a contrarian. I like contrarian worldview businesses. And your best investments are those that you actually go in alone when nobody else believes in that strategy, that sort of company. And wherever we've gone in alone, and like I've had potential co-investors saying that, oh, look, this is wrong or that is wrong, and this is why, or this category is not, or the TAM is not. I'm like, what are you talking about TAM in a country like India? Like, everything has TAM. So what if you can't see it today? It's about the ability of the founder and the product to really
Right.
build that TAM for themselves. So it doesn't, really bother us if, we hear that kind of feedback. We continue to support our founders. And I think then, I mean, in a sense, they're the best or the last man standing, because they've also executed well. They've been capital efficient, because ultimately we're a small fund. So we can't really give very large sort of pools of capital to our founders till the time that we are the only sort of investor there. So we've seen that the discovery and the next round investors do sort of come around. It's like the clock is right at least twice a day. So
Right.
our investment thesis is right at least every couple of years. So which is fine, which is what it takes for our investments to sort of mature for the next round investments.
Can you share a contrarian story with me? Like, I feel like I'm a contrarian as well. And I know when I was building my business, everybody said to me, like, just flat out, like, that's not going to work. Right. But I'm just curious if you could just share one contrarian story with me where everybody else in the market was like, yeah, that doesn't. And I love what you said about damn, like, damn, in India. Are you kidding me? Like, how could it not be huge unless it's something
No,
that,
everything
like,
has TAM.
yeah,
I mean, and if there is an existing product or an existing company that's not been able to,
it's obvious.
yeah, and hasn't been able to, let's say, really fulfill that larger number, it could be, poor strategy, poor execution. I mean, there are many
Yeah.
reasons for it. It's not that there isn't TAM for it. So, one of our earliest, I mean, in fact, it was our second investment was in this candy company. It's an Indian flavored candy, so it's not a hard boiled candy or chocolate, which is the bulk of the market in India. So this is very local flavors, local sort of form factor, and it's a very traditional sort of way of making it, which they've of course now mechanized and made it a more industrial process. So when we invested in that company, what everybody said, oh, this is an impulse category, and there was no other sort of um, company that was really doing well. And everybody said impulse category, it has a lot of problems to it, nobody buys, your LTV will suffer. And what we've seen is that not only has that company grown from strength to strength, um, I mean, the founders are superb. I mean, they have done so much innovation, which is not obvious to the naked eye in that sense. But now they're the, belle of the ball almost. I mean, they're very sought after. Now, other funds are looking for, those categories to sort of invest
Right.
behind. But they should have done it when we did, because you shouldn't invest once there's already a success story. I think, unfortunately, I think human beings want to see something that gives them confidence to invest.
Yeah. I mean, look, when I was sitting on a trading desk, one of the things I used to ask the guys and gals that wanted to join was, what's the biggest risk you've ever taken? Because the trading desk itself was fundamentally a place where risk was getting taken. And if you thought that that was going to be the best place or the only place where you manifested the risk in your life, that you were never going to be a great trader because you just weren't comfortable with that feeling, right?
Yeah.
And it's the same thing for investors. It's like if your biggest risk is just following what somebody else's risk, well, then maybe you're in the wrong business.
Yeah.
No.
So in another company, they make bamboo home, home care products, and then
Nice.
now they're doing cleaning products which are chemical free. Again, nobody else wanted to go in. We went in, and now I mean, they've raised a large round, and again, it's because of how the founders have executed, of course. But again, when we went in, and a lot of downstream investors said, "Oh, they're a garbage bag company. They're a tissue paper company. That's a commodity. You can't build a
Right.
brand there," which is both true and not true, right? For everything, I mean, everything can be a commodity, and everything can be a brand, depending on again how you execute, what your vision is, what is it that you can connect with your consumer.
Do you think that the startup ecosystem in India favors generalists or specialists? Like, what's your view on this idea of a polymath?
I mean, I believe in polymaths, and I think the world should be ruled by generalists. And there has been some sort of commentary that now with generative AI in the mix, this will be the century of generalists. Um, when you say specialist, you mean specialists to that subject in which they're building? Is that
I think in anything, in other words, does an engineer who's not going to be a technical founder per se have an edge over somebody who just has like a wide breadth of understanding, who understands history, who understands cycles, who understands the economy, and who understands the market, who has a general understanding of business, is really like a true polymath, or somebody who's just like focused in on like advanced mathematics their whole life?
I think
And
a
even though they're well educated, do you know what I mean?
Yeah, yeah. So I think a polymath would be my, because look, the world has always been complex and it continues to be complex. The core of what makes us human requires a broader understanding of events, motivations around us. Data can be manipulated. I mean, in the hands of whoever has that data. So data
Yeah.
cannot be held as the primary god of all things that you want to sort of understand. I think this move towards putting data at the core of everything, or what I think a lot of people think is science at the core of everything, I think it does a disservice, because even science itself has to base itself on so many different parameters and aspects. So if you look at medicine, which is the most well known sort of a part of science that we all interface with on a daily life. You go to a doctor, I mean, even the busiest doctor will ask you more things. If you've got an upset stomach, it just won't be, here, let me give you this medicine. It's not a simple linear solution that can be provided. There are other aspects to who you are as a person that can lead to certain sort of conditions. So I think we did some disservice to ourselves as humanity, as a human race, by focusing only on, let's say, technology, code, or just data by itself.
Yeah.
I think human beings are not that. Human beings work. I mean, the reason we are all on social media is because of the emotion it generates. It's a belief that is connecting us to a much larger world than we have access to. It's not because we think there's great tech or we understand the tech that it's built on, for example. So, by putting so much sort of emphasis on technology or data, I think we've missed a lot of things about human motivation.
Yeah, which is really important. Look, again, I say this all the time. Science is great, but fundamentally, and it's an experimental discipline, right? Just because you're a
Exactly.
scientist doesn't mean you know everything. It just means you're experimenting about things you want to know. Um, you've mentioned Gen AI a couple of times. I don't think it's going to fundamentally change your investment view per se, but has it changed the market for investing in India and the things for which people are looking to invest in, if that makes sense?
So we do have a small tech fund as well, which is a different vehicle through which we invest in
Yep.
technology. So when we started, we did say that we will be looking at Gen AI, as one of our core investment themes, what we realized very quickly is that there aren't too many fully understood use cases, which can therefore then be turned into products and then businesses. So I think Gen AI, like all technologies, will take its time to come to a point where it integrates so seamlessly in our everyday life in the way, let's say, a mobile phone has, or other pieces of technology that have integrated so well in our daily lives. So I think we're still some time away. But again, as an investor, the only thing you know is that you're going to be surprised the next morning, because for all you know, immediately after this conversation, maybe I'll meet like 20 great founders all having some brilliant products.
Right. Fair enough.
Yeah.
Do you look at your founder cohorts in combination, right? Not just this year and next year, whatever it is, as their own kind of little community? And do they lean on each other? Do you encourage them to lean on each other to kind of understand where one went wrong or one went right? Do you know what I mean? And to support each other, or are they just considered like separate businesses, separate
No, no, no,
silos,
no.
and
I
they don't
think
really
early
meet?
stage founders do support each other. If you're part of the same portfolio, I think there is a sense of camaraderie and brotherhood that does sort of develop. We do have a bunch of things that we do with our founders together, but because each one of them is in a different business, in a different category, and sometimes different stage,
Yep.
some companies move and accelerate much faster than others. So it's not as if you can like kind of have a classroom situation with
Sure.
them, but they do reach out, because then there are some common points, that they feel that they need to sort of speak to each other about. And I mean, we both facilitate it, as well as, of course, I mean, they already know each other quite well.
Got it. Okay, look, I'm going to let you go. Archana Jahagirdar, founder and managing partner in Rukam Capital. I want to offer you this, though, before I let you go. If there are any of your portfolio companies that you think would be interesting to have on the show, I'd love to be able to feature them. I really appreciate the insights that you shared with me today. Thank you so much for your time. I really
Thank you.
appreciate
That's
it.
a lovely offer, and I will definitely take you up on it.
Please do.
Thank you so much. I enjoyed this.